What is going on, investors? Back again. Time to talk about a Roku, ticker symbol ROKU. This stock just reported earnings after the bell. You see the stock selling off just slightly. It's kind of bouncing around a little bit, but up nicely, about 4.33% during the regular session. We're going to talk about the most recent quarter. They beat on their EPS. They beat on their revenue. They have active accounts that are increasing. Their ARPU increased about 20%. When we jump into the numbers, we'll see evidence of all that. They did their quarter over quarter. I love this. We'll take a look at the numbers. Then when we jump over to the balance sheet, I'll give you more of a general lesson here. You see they went from the beginning of the year, they had 925 million. They ticked up to 1.5 billion in total current assets. I'll walk you through how I was like, well, where'd that come from? And so I'll walk you through how you can potentially figure that out. And then finally, actually the stock chart's really interesting. We're actually approaching this overhead supply level where I drew on a red line here. And so I'll talk about the different scenarios, the different directions a stock can take when it approaches kind of an overhead supply level and things to look for in that sense. So Roku looking strong to me in the after hours. $28 billion market cap, no PE. They don't make money yet, but all things considering, this is a pretty solid company. When you get to the financials, I think you'll see why. Now, what I did here, not always what I do, but a price to sales ratio. I kind of compared Roku to Netflix. Now, it's not an apples to apple comparison. While they're in almost the identical business, Netflix has like a subscription model, whereas Roku relies more heavily on ads. So I guess you could compare Roku maybe to a Comcast or some of these others, but a lot of them are not pure play streaming companies like Roku, whereas Netflix is probably the closest comp as a pure play streaming option. You see here, this is a price to sales basis, and Netflix is the blue line, Roku is the orange line. You see they've converged every once in a while, but actually Roku trades at a premium, and we're at an almost record high from a price to sales basis with Roku. So in my opinion, at least from a price to sales perspective, Roku stock is probably slightly overvalued, but it's not necessarily how you need to analyze this. You need to factor in the growth rate and how fast Roku is growing. And when you take a look at this chart, we've got Q3 over Q3. So here's our year over year. But then what I like too is they mix in the rest of the quarter. So you can kind of see a consistent growth rate. You see active accounts. This is important to the company because they're not, I mean, they're getting a lot of their money by running ads and things. So the more users, more active accounts they can get on the system, the more money and more advertisers that are probably going to flock to them. So that you see that's up about 43% year over year. Streaming hours, this is also important, almost something like important to YouTube too. The more people that are on the platform, the more people that are streaming or watching things, it's the better it is. That's up 54% year over year. And then finally, average revenue per user, you see was at $22.58. Wow, that's pretty nice in a quarter. And then that's ticked up to 27. That's actually, we're at a possibly an all-time high. I would imagine maybe $27 is an all-time high. So now deeper into the financials here, we've got platform revenue here. That's the money on the platform. We see the player revenue as well. What's interesting about the player revenue is we see it was a single digit. Here it was negative. They had negative margins on the players here. Ticked up a little bit, ticked up a little bit. Take a look at this. Player gross profit ticked up actually quite a bit. I mean, you see here 224%. That was fueled by these player gross margins. Take a look. Gross margin 7%, negative 11%, 7%. So you'd think a blended average here is right in that 5 to 7% range. Well, take a look. Player revenue went all the way up to 15%. I think they announced some new products and it looks like they're making money on them. So that's solid. That's an interesting development. I always thought that would be a loss leader for them, and then they would make all their money obviously on their platform. It's still an insignificant amount of money for them, but it is interesting that they are churning out gross margins from those players. Now, from a platform gross profit perspective, we see that's up 73% year over year. So that's solid as well. And the gross margins, they've ticked down from the previous period, so this previous year, but obviously we know there's a lot of stuff that's gone on this year. So take a look at Q1 and Q2 when more of the health situation was in there. Advertisers were pulling back, a lot of TV got pulled back, sports, things like that. Well, margins went in the tank, but notice that they've gotten back up over 60%. And to me, that's more of it. It looks like an inline number, what they've done in more traditional business. So maybe the worst of everything is behind Roku, and they've performed nicely with these platform gross margins. Now, total gross margin down here at 47, that's coming in and hot over any previous period as well. That, again, is fueled a lot because of this player gross margin ticked up quite a bit. So they're at a blended margin here at 47.6%. That's solid. Now, taking into factor all their other stuff, they've got, $202 million of total expenses. Take a look here. We made some income from operations here, and I'm saying that it's 12 million bucks. It's not a lot of money, but take a look. We lost money, lost a lot of money, lost a ton of money, and then boom, we've came back and it's actually positive. And so this is, I don't necessarily know if this is the company turning the corner. They've reached that tipping point. It doesn't look like to me, because these numbers kind of bounce around a little bit. I mean, they really accelerated here and they look really high here, but they turned around nicely here. So we'll see what happens. If this is a trend in Q4 and Q1 of 2021 all look like this, look, that's a great trend, and this stock is probably undervalued, and it probably tells you also why you have this elevated price to sales ratio, because these sales are growing faster. I know for a fact they are growing fast. They're not as big as Netflix, let's don't get that wrong, but they are growing things faster than Netflix, and they are at a tipping point. Investors love tipping points. They love when you go from negative to positive operating income, and if that continue, you also get an expansion of gross margin as well. Those are all positive things. Now let's move on to the balance sheet. Take a look here. They increased since December. They increased their total assets by about 500 million. Okay, they had 500 million class. Now they got $1 billion. Okay, accounts receivable ticked up nicely as well. You know that this is not from operations, because take a look. Since December, they lost 55 million operating. They lost 42 million, and they've made back 12. So they've obviously lost money running the business. So you want to figure out, well, where did this come from? First thing to do is come down to liabilities and take out debt. Take a look. We went from 94 to 91. We actually went down. So it could be current debt. Maybe it's a short-term thing. No, that went down too. It went up slightly. You went from 488 up to 488. And so it's not debt, at least from a traditional perspective, kind of bank loan type thing. So the next thing you need to do is zoom down to cash flows. One thing before we get to that, take a look at the 9-month end and take a look at our cash flows. Came in at 101 million compared to 24 million. That's some super hot cash flows. Now, the last thing you need to do is figure out where this cash came from. Come down from cash flows from financing. So proceeds from borrowing. So we've got some borrowing here, but here's the vast majority. Proceeds from equity issued at the market. So this is ATM, at the market program. Basically, Roku has a system where they can issue shares and sell those directly into the market, basically at a certain price, and almost use the shares of the company like an ATM. And you see they did that quite effectively here. We were at 179 in the previous year, and we bumped that all the way up to about 500 million. So that, in my opinion, is where the vast majority of where the money on the asset side came from, was actually the company issuing shares. Now, yes, a little bit of it came from operations, a little bit of it came from accounts receivable, but you see this ticked up 500 million, and the vast majority of that is going to come from these proceeds of shares. So just wanted to point that out. Just keep in mind, this company is still in fundraising mode, issuing shares mode. As a shareholder, you probably should be aware of that. Now, moving on to the stock chart, everything looks pretty darn good to me. So we're coming up here, and these are, I believe, the all-time highs for Roku, or at least in the shorter term here. So that's up at the 238. We'll just call it 240 for an even round number. Here we are. To me, this line right here that I have it right, or we'll call this 230. It looks like the stock is actually peaked up above this in the after hours. So something's going on. The conference call is pretty nice, or people are digesting these numbers like I am and seeing they are actually very strong, especially from this operating income side, and especially if these gross margins stay the same, especially on this this player. I know that, again, this is not significant revenue for them, but if this player revenue can stay positive, it definitely can benefit the stock. So people are seeing that this is, this is a positive story, and this is perfect. The stock has ticked up over what I see as a resistance line. So we had resistance here. It acted as support on this red candle, resistance, resistance, resistance all the way along here. Once it got rejected enough time, well, enough sellers stepped in and not enough buyers stepped in. The stock traded almost down to this 50-day moving average, this kind of teal line. So I'm going to zoom in a little tighter here. And so what's going to happen is the stock is literally in the after hours trading right on our line. So we're right at this 229, call it 230 level. So two things usually happen here. Okay. The stock breaks above here, this 230 mark, and puts a candle up here. And sometimes that's called like a head fake or a fake out. And what happens is the stock closes up here and people think, well, that's a bullish sign. If the stock can get above this trend line and close, put a green candle up here, that is somewhat of a bullish sign. A more bullish sign is if the following day the stock can go rally up again, probably close to this 239 level, and close there again. Now that it's not guaranteed. Anything I'm telling you here is just odds enhancing your decision making on whether or not to buy or sell Roku. But two closes above 230 would be a bullish sign, and in my opinion would definitely get us back to these all-time highs, or at least test them at 239, 240. Now, an even bullish sign is if the stock continues to rip, it starts making like, an uptrend here and then just continues that uptrend until it's finally broken. The other scenario is the stock comes up here to 230 like we're seeing in the after hours, stalls out here and then gets rejected, probably back down to the 50-day moving average, wherever that will be at the time. You got to remember, as days go on, this line trends up. You'd probably be in the low 200s at that point. So those are the two scenarios that I could see happening, is that Roku comes up here and it's a head fake. It closes above this and it's head fake, and the stock comes back down to this 50-day moving average, which is where I would probably consider it being a buy. The second option is the stock pops up above here, closes, and then maybe does another retest of these highs. Then it could be off to the races. You could be seeing some new highs, especially if the broader market is rallying. So I like what I see with Roku. The chart looks okay. I personally would wait to see what happens up here. If it breaks up above, or if it fails and comes back here and retests kind of some of these levels down here, I certainly think it would be an interesting buy down there. Now, again, from a price to sales perspective, you're playing a pretty hefty price, but from the financials and the fundamental perspective, it doesn't look too bad with Roku. Probably slightly overvalued in my sense, but they are growing rapidly, and it seems like management is doing a pretty solid job with this one. So if you own some Roku shares, I'd pat yourself on the back. You probably have a huge winner here. We'll see what happens with this one going forward. We'll certainly cover it here on the channel. So hit that like button and the subscribe button if you like what we're doing here. We'll be back again soon with more videos. Good luck with your investments.